Welcome to the Mastering Commercial Real Estate Podcast, the show where we dive deep with top investors, operators, and industry pros to uncover how they're building wealth and creating real impact through commercial real estate. I'm your host, Cory Mortensen, capital raiser, commercial investor, and founder of 19 Holdings. Whether you're just getting started or looking to level up, this podcast is your go-to for real insights and actionable strategies. If you enjoyed the show, please hit that like button, leave a quick review, and share it with someone who should be listening. If you've got feedback or ideas to improve the show, I'm always open and I want to make this better for all you listeners. If you're ready to start building wealth passively through commercial real estate, visit 19holdings.com. That's ONE-9 Holdings to learn more and join our investor list. Enjoy this episode. Hey everybody, and welcome to the latest episode of the Mastering Commercial Real Estate Podcast. I'm your host, Cory Mortensen, and today I'm very excited to have an old friend on the podcast, Chris Affinito, who is the managing partner of Notional Development Partners. He is someone who I have a lot of respect for and is someone that I actually did one of my very first deals with when I launched my company, 19 Holdings. He is a specialist in development, affordable housing, finance, capital raising, market insights, and building with purpose. And everything that he does is extremely valuable to his partners, the city of Austin. And I'm very excited to dive into how Chris got started in real estate, what he's working on now, and some of the strategies that he works on. Thank you so much for coming on today. I really appreciate it.
Yeah, thanks, Cory, for having me.
Yeah, so just jumping right into it, would you introduce yourself to the audience, let everybody know where you're from, who you are, how you got started in real estate, and kind of bring us up to date?
Sure. Yeah, I'm Chris Affinito. I have been doing real estate development for getting close to 15 years now. I'm from New Jersey originally, and so got my bachelor's degree at Villanova in finance and real estate, and kind of jumped straight into working for real estate developers. I worked for an office developer in New Jersey, and then eventually just wanted to kind of move out of that part of the country and really liked Austin, decided to move there. And I've been on my own ever since. And, rather than jumping into office development as a 20 whatever year old when I came here, I started kind of small, and then I started building houses and building more houses, and then bigger projects like townhome communities, and then just kind of grew my way into developing multifamily. And so over the years, we've developed a pretty specific program. Sometimes people call it workforce housing. So some kind of middle ground between true market rate rentals and deeply affordable, like low-income housing tax credit type of projects. We like to say affordable luxury affordable housing, because what we tend to do is we tend to build nice Class A properties in Class A locations, kind of like, it's where you want to live. All of our properties right now are in Austin. That works well for us because, well, Austin's got still, despite, some cooling off in the market over the past couple of years, a lack of affordable housing. And Travis County, where Austin is located, has very high median income. And so when we target workforce housing, we're really talking about focusing on teachers and first responders, service industry. And it's a really nice tenant base. And it's really cool to be able to, stack our building up against any of the new luxury mid-rises, in East Austin or South Austin or wherever it is that people want to be, and you can go rent a market rate unit with us, but half of our units are income restricted. So, if you are a single teacher, you probably can't afford a $2,000 one bedroom, but there are some affordable units that are maybe, $1,300 for you. Obviously, there's the same thing with studios and 2 bedrooms and everything else, but it's a major discount to market rent. And the way we do that is we partner with the housing authority, and they're able to offer us a property tax exemption in exchange for these set asides. Like I said, it works out really well. Obviously, from the investment standpoint, we save a little bit more in property taxes than we lose to market rent. And so it kind of helps the deal get going a little bit, which is good because I'm sure we'll get into this later, but it's been a challenge to capitalize big projects like this in Central Austin over the past few years.
Yeah. And just building on that, what are some of the other advantages and maybe even disadvantages of the affordable housing business plan, especially with development? You stated that the biggest advantage is the tax exemption, and that's, obviously one of the biggest ticket items when you're underwriting for real estate and your operating costs, and that makes up for the difference in what the rents would be because you have to, you're charging less for rent, but you're getting it back on the taxes. What are some of the other advantages and disadvantages of the affordable housing business plan?
Sure. Well, first of all, there's a lot more cooks in the kitchen. Right, that's just part of it. You have your capital partner, you have your lender, you have everybody else that you normally have to deal with in a development ecosystem. Now you also have a public housing authority, which it's got a high degree of public accountability, and so they have to be very mindful in what they're doing. So they're very thorough. There's a lot of attorneys involved in these transactions, and there's just a little bit more work to be done to make it happen. We're fortunate enough to have solid repeat relationships. And so, you kind of get one done and the rest get easier like anything else. But that's something to be mindful of. It's not as straightforward as a market rate deal. The legal structure is very complicated. And so that creates, you have to educate your investors. You have to educate your lenders. It's just a little bit more work up front. Traditionally, the knock on affordable housing is that you're going to assume that over the long run, rent is going to grow less aggressively than market rent. We push back on that notion, and I think in a lot of places in the country that may be true, but for the foreseeable future in Central Texas, that's just not really going to be true. I mean, market rent has been declining for the past couple of years, but is likely to start growing again. Affordable rent grows at a really healthy clip every year because Central Texas is just importing a lot of people and a lot of people with high earning jobs, and it's making median income increase, which increases the rent levels that we charge. And so from our perspective, it's almost counter-cyclical. We've had 50% of our units where rent has gone up from year to year. Meanwhile, the rest of the market has seen declining rents across the board. We also think it helps us with occupancy. We're going to have kind of pretty low structural vacancy because these units aren't going to spend a lot of downtime.
And when you are looking at filling out the units and making sure that you are capitalizing as much on the property, you're getting as much out of it that you can, are you working in the with housing vouchers as well, or how many of these credits are you able to take advantage of in this type of development, in this business plan? Is there a limit to how many different strategies and different advantages for the tenants that you can utilize, or can you take into account as many as you can authorize, really?
Yeah, I mean, we do accept vouchers. That's not a form of subsidy for us. There really is no other subsidy besides the property tax exemption. Historically, the housing authorities are heavily involved in low-income housing tax credit deals where there will be a tax exemption, there will be an issuance of bonds to finance the property instead of a traditional mortgage. And of course, there's the tax credits. And so there's layers and layers of subsidy in exchange for much deeper levels and much broader levels of affordability. Ours is a little bit more simple in that, we're just trading off, more moderate levels of rent reductions in exchange for an exemption from property tax. We do have a kind of cool, I mean, one of the other kind of advantages is we also frame our properties out of structural metal studs instead of wood. And we do that for a number of reasons. But one of the interesting results is we have a non-combustible building. And so when a lot of other developers have really been struggling to get property insurance at all, they kind of have to go through their property manager and the property manager's insurance pool. We can get our own standalone policy, 35 to 50% cheaper than a stick frame policy. And so you combine that with our tax exemption. When we show somebody a pro forma, we have to, again, educate people because we're showing an 18 to 20% OPEX ratio and everybody thinks we're full of it. And so then we have to go and show them, well, here's exactly what our pro forma would look like if we were building this out of wood and if we were paying property taxes. And all of a sudden we have our 43, 45% OPEX ratio. And it's like, oh, okay, yeah. But yeah, we end up with a very, very durable product long-term and a very stable operating budget long-term.
Yeah, and I think that approach has quite a few advantages. It's kind of got a triple bottom line. You've got the asset itself is really just a better asset, and in terms of its construction, right? I mean, you just said but it also influences the financial bottom line. You've got a lot coming back to you. Now you've got the taxes that are much lower. That's the biggest ticket. Then you've got insurance, probably the second, if not the highest other ticket item in your underwriting. So your approach has knocked out a lot of risk and hedged in those two departments pretty effectively. And also on the exits, and how many exits are you performing? Or are you holding these properties long term?
It's capital dependent, and kind of depends how you define exit, right? So if we have a capital partner that wants us to do sort of a merchant developer model, frankly, that's most of new development with smaller kind of sponsors like us. Most of them are merchant developers, sell it off. I'd prefer to own the real estate long term, and the housing authority would prefer me to stay in the deal as well, right? Especially when I've got a number of deals with the same housing authority. They've spent kind of, a lot of effort getting their board comfortable with, a concentration with a single sponsor. And so they don't necessarily want to get involved in this partnership and for me to just, build it, lease up the units and then flip it to somebody else. So, again, capital dependent. If I have long-term capital, for example, I've got some projects in opportunity zones. So if I end up capitalizing that with opportunity zone equity, that's going to be a long-term hold. That's great. If it's a capital partner that needs a short-term merchant developer model, well, we'll try to recapitalize it, find some more some long-term equity at stabilization, and we'll stay in as a project sponsor.
Yeah, and the reason I asked that is because with the way that you're building this construction and how that helps the bottom line, that adds a lot of value to the real
Mhm.
estate as compared to other assets that aren't constructed that way. And you've got the competition of other properties that are being developed and built, and questions about how sturdy those construction, because everything in Austin is getting thrown up as quickly as
Mhm.
humanly possible, right? And so there's been a lot of attention being paid to, okay, are these properties really sturdy? Because I mean, a lot of these are a lot of vertical, mid-rise, high rises. There's some questions about the Jenga tower in central Austin, about its structural. So that approach is huge. And then in terms of the tenants, being in a building that is well constructed and isn't going to have issues and not turn into something that's going to have issues is huge. And I love that you have that approach and that mindset going into it. And it helps everything else along the way. The ripple effects help
Mhm.
everybody, the developers, the tenants, city, all in the long run. So I love the approach. Getting back to kind of your story, your background, what was the catalyst to you getting into real estate? What really was the interest? Because you were in kind of a finance background before, and what made you leap into the entrepreneurial world of real estate?
Yeah, I mean, I've always been in real estate. Started, in undergrad as a finance major, took a real estate class, had a great professor, really liked the class, and then kind of moved over to real estate from there. And so all of my career has been in real estate. But as far as getting from, being an employee to an entrepreneur, it was a little bit haphazard, I guess. I mean, I just moved to Austin because I wanted to get out of the Northeast. I didn't wait to accept a new job in Austin. I just moved here and then just got my feet under me. And like I said, I started small, just building a house. And I enjoyed the freedom. I enjoyed the creativity, and then I just grew from there. And now I can't imagine not being an entrepreneur.
And in terms of the strengths that you have that allowed you to be so successful in everything that you've done, what would you say that your greatest strengths are?
I mean, this is a weakness too, but I guess I think I am more willing to dive right into the water than some people are, and so a lot of my career has been, not to mix metaphors, but bootstrapping, right? I'm kind of learning as I go, and so I make some rookie mistakes. I do some things where just a few years later, what was I thinking? Why would I ever do that? I didn't have necessarily the bumpers on that you'd get as kind of grow through the ranks of a larger organization. But on the other hand, I've picked up some perspectives that you don't get working as an employee for a bigger shop, and learn some lessons that you don't get to learn except for the hard way. And so that's obviously, I think, been accretive to the overall experience that I've had. Learning through those mistakes is ultimately going to make me a better developer.
And on the flip side of that coin, weaknesses. What would you say are some of the weaknesses that you have, and what do you do to compensate for them?
Yeah, I mean, look, I don't have a background in construction, and so I ended up hiring and then partnering with a classmate of mine. I also got my MBA in the University of Texas. I did the executive program, which is kind of for an older cohort. And, met someone, one of my classmates, he was in commercial construction. He did some of the high rises on Rainy Street in Austin. He did Music Lane on South Congress. And, he is an absolute wizard when it comes to construction science and engineering. He's got multiple master's degrees in engineering and business, and he's just a really smart guy. And, the way we have been able to manage projects and actually go through development is, is pretty sophisticated and we manage at a really high level. And I really owe a lot of that to him, right? I mean, the things that he catches during the construction project that I would never have had that experience to catch has been really helpful. So I guess that's a strength of our company. We're kind of using our skill sets really well, and there's not a whole ton of overlap in what our core competencies are. But yeah, a weakness for me is I don't have a background in engineering or construction. I wouldn't really be able to manage a complicated build like that by myself. Similarly, I don't have a long career in like investment banking or private equity. I don't have a deep network of lots of institutional investors or family offices or even retail investors. So, some people come into the industry with, maybe from the construction side or the engineering side, and they're a strong project manager. Other people lead with capital, right? I can raise money. So let's go find the deal. I didn't really have either of those backgrounds. And so, I've solved for the construction piece. I've had to just get a lot better at figuring out how to form capital relationships. And one of the things, frankly, that's, been a learning experience is, well, all of a sudden you go into a down market and you have to really fight harder and harder to capitalize each deal. Right. And that's just one of the type of things that, if I had a different type of background, would have been an easier experience for me.
Right. It's all about, and especially as an entrepreneur and just diving in head first, you have to learn so many skills that some people, it's their entire job duty, just that one aspect, and it can still be difficult. So when you are trying to balance all these different aspects, and you've done incredible things in your career, and I mean, developing these large Class A multifamily properties in the heart of Austin, and you were doing it when everything was as hot as it could be. What really set you apart from the competition, and what advice would be helpful for capital raising and for deal finding? What are some of the things that you know now?
Yeah, I mean, well, I think one thing that we did well was we found a niche, right? Like, if I want to develop just a mid-rise market rate kind of Class A apartment building in Austin, I've got a lot of competition, and I've got competition from really big players. And so I would be, a little fish in a big pond. And likewise in the low income housing tax credit world, a lot of people want to jump into them because they're very complicated deals, but they can be very good deals. It's a mature industry. There are people out there that are groups out there that have been doing it for a very long time. They're very good at it. And these low income housing tax credits are a finite resource, and they are allocated competitively. And the best low income housing tax credit developers are the people that are going to get most of the allocations. And so I think by carving out a niche that's becoming more and more popular, but is not as mature of a deal execution as those other market or light tech, that's been a major advantage for us. We can come in and all the things we were talking about earlier about the operating budget and and everything else having to do with workforce housing, we can kind of sell on that, and that's at least a different kind of deal.
And in terms of the capital raising aspect of it, and you touched on it a little bit before, but what are you doing successfully now to raise capital? Is it mostly from smaller groups, large check writers, or are you going out and having to find more investors for your investments? Or what does the capital raising process look like for you?
It's we're doing a little bit of everything. We have institutional partners. Really enjoyed having repeat institutional partners, right? That's get through a deal together and it goes well, and you want to go back for more, and everything's easier. You work well together. And that's something that I've really enjoyed doing. For smaller deals, or like, for example, I typically have to almost break this into two deals, right? I have to be able to acquire land and entitle it and permit it before I can really close construction debt and equity and start building it. And so the front end of that obviously is a lower budget kind of thing. And so I've had some success syndicating investments from retail investors, and that's been great too. And I would love to be able to, one day blast out a memo and, raise enough money to do a big 350 unit deal. I'm not there yet. Again, I know people in the industry that came into the industry with much more of a network and much more experience doing that. I think you're doing a lot of that as well. It's very cool to be able to do it. I'm just not there yet.
Yeah, and what would you say, is that the most difficult aspect of the business that you and I are in, or would you say that there's other aspects that are more difficult than the capital raising, for instance?
I think it's very cyclical. I would not have told you in 2021 that raising capital is the most difficult part of putting a deal together, right? Because it wasn't. Right now, I would say yes, it is, especially when you're developing, kind of costly price per unit infill structured parking projects in Austin, which by some measures is literally the worst performing market in the country. So like very, very cyclical. I feel really good about Austin's fundamentals, and I feel really good about a near-term bounce back, or really near-term bounce back and all that. But that doesn't change the fact that over the past couple of years, it has been a whole lot harder to just get investment dollars than it was for someone trying to invest in Austin in 2021.
Yeah, and I would agree 100% with that. And a lot of what made our success in the beginning and us partnering on that first deal was there was so much attention and so much heat in the market for investor capital to be put into real estate. That was the number one headline in every article, was how great real estate is doing. And so when the headlines are all pointing green flags towards your industry, a much easier position to be in than now when we're facing large contractions, especially in the Austin market, which, like you said, by many measures and reports is being hit the hardest, if not very hard, if not the hardest. And so in terms of how you have adapted to the changes in capital markets, capital raising, deal finding, bid ask gaps are still insane. How are you still moving forward, and how has your business changed in the last couple or few years?
Yeah, I mean, still moving forward, it's just a lot more effort. Things take longer to close. You need to put a deal in front of more people. I've pushed out start dates further than I've wanted to on a couple of my projects. But you just keep chugging along. And for example, I've done some deals where I've given away a much higher pref than I might otherwise. But it's a risk thing. And right now, it's the name of the game for me is not necessarily finding like the optimum capital structure that, gives me the best back end deal I can get. It's kind of about just getting things capitalized and moving along, and kind of waiting out what's not been a really good cycle for infill developers in Austin.
Yeah, and how are you structuring your deals for investors right now?
It's different deal by deal, depending on what kind of investor is in it, how much money there is, how much money we're talking about. We've gotten kind of creative on the lending side as well, right? So for example, there's a CDFI, is a community development financial institution, right? And so they will lend using federal funds, and not exclusively federal funds, but a lot of federal funds, and they'll lend for sort of impact type investments, including affordable housing. And so they tend to be smaller. They're not going to go and be my construction lender for a 350 unit deal, but they make for a great bridge lender for, say, the pre-development phase, and they tend to offer higher leverage than a bank would. Again, difficult deal to close, a lot of red tape. It's a little bit bureaucratic because of the federal funding element, but that's allowed us to kind of just have to raise less equity, right? If we're just getting more leverage. And I don't always necessarily want to maximize leverage, but sometimes, like right now, you got to get creative. It's a little bit hard to sell someone on carrying land, and that's what we've had to do.
And where do you see, obviously we're kind of in the bottom of the tranche in terms of the cycle where things are, and real estate is cyclical. It used to be pretty predictably cyclical, 5 and 10 years apart from, how the markets are generally, especially in commercial real estate, things were pretty predictably steady in terms of how to anticipate. But with the rampant increase and attention in real estate and with the development of new prop tech, information being more readily available than ever before, do you see these cycles becoming shorter, more erratic, more volatile, and more unpredictable? Or do you see real estate still being a relatively predictable industry in terms of cycles and where things are moving? Or do you think we're going to get surprised like we did 5 years ago with how crazy things can actually get?
Yeah, I mean, obviously, tough question. Crystal ball's broken, all that stuff. One of the things that I think makes it particularly challenging is that we are still um, we're still dealing with the fallout from COVID, right? One way or another. There's a lot of debate in economic circles about whether we've entered a period of secularly higher inflation. So we don't know, for example, what the neutral rate of interest is for the Federal Reserve right now. Some people think it's quite high. Some people think it's a lot lower. There's a big gap in what people think that's going to be. So it's hard to know, what are we going to get? What's going to be back like a neutral policy? Where is that? Are we at neutral now? Do we have a lot further to go? And so it's hard to predict where are interest rates really going to end up. A lot of people think this is what they're going to be. And so I think we just have to sort of wait and see. I think it's especially hard right now to say, well, I think it'll be a 7-year cycle or something like that. The other thing is, sure, there's interest rates play a very big role in all of this, but even if interest rates just drop dramatically, you're still on a more local level dealing with the fact that Austin had so much production over the last couple of years, right? And so regardless of the interest rate environment, there's just simple supply and demand for leases of apartments. And whatever interest rates are or however low they could have dropped or might drop or whatever, it doesn't matter. We need to cycle through all the new deliveries. And, I think fortunately for Austin, the fundamentals are still really strong. There's still a lot of immigration. The jobs that are being imported to the city are really good and high paying jobs. What we've seen is in Austin, at least we've seen record demand, I think near record demand, only outpaced by the height of 2021 as far as absorption goes. And so, as we get to the end of the deliveries, which is kind of really going to start to taper off in about a quarter, if we have a demand that's anything like what we've experienced over the past year, Austin is going to be a much more attractive place to invest, even at higher interest rates.
And taking a step back a little bit, what was a deal that, good or bad, what was a deal that you've done in the past where you learned the most from? It could be the most challenging, the most rewarding. What's a story that comes to mind, and what did you learn from that?
Yeah, I mean, I would say the first deal in the kind of the program, the niche that I've been talking about, right? That's all at once, right? So I'm going from building something smaller, 16 units, it's for sale. It's kind of a condo townhome project, maybe it's 25 units, whatever, to all of a sudden building something over 100 units, using this structure with a tax exemption, just kind of putting a whole lot of new things together. And you really don't learn it until you just experience it all. And so that was a lot of new things for me in one project. And, it went fine. There's some bumps along the way, especially initially. Learned some things about the politics of, using tax exemptions with housing authorities, and it all ended up working out fine. But definitely, I mean, I think that your first go at one new thing is where you learn the most.
Exactly. And when you are dealing with the city and the politics of development, what is some advice that you could give for people who maybe have not dealt with this side of things as much and they're about to get into a development or they're thinking about doing a development? What are some correct ways to go about speaking with city officials, government offices, and things like that to get through some of the red tape a little quicker from an experienced operator?
Yeah, I mean, I think it's who you're partnering with. You need good consultants, you need a good team. You need to make sure you have a complete team. I mean, part of it when I talk to people that are wanting to get into development, part of the problem is they don't know where to start, and so they wouldn't know. I mean, maybe they understand that I need to go get an architect and get a building permit, but what about the civil engineering? Who's going to quarterback this? Are you going to have a civil engineer do it, or are you going to involve a land use attorney? If so, what kind of land use attorney do you want? And so the way we've chosen to go, we work with a firm who maintains really good relationships with the city. So we try to be kind of the good guys, right? We don't want to have a big political battle. We don't want to try to steamroll city officials. And so, we found someone who we trust to act as a really good quarterback for us. And now on top of that, like I said, I've done everything that I've done essentially has been in the city of Austin. So I know it well. I kind of know the politics. I can look at a piece of land and I know what I can change the zoning to. I know what's not going to fly. When I look at one of my buildings going up, I have a really good sense of what other buildings I'm competing with. I like to think about it as a tenant and understand, like, if I needed to lease an apartment in East Austin right now, which buildings would I look at? And if this thing that I'm building right now but has not yet delivered, if this was available to lease right now, how would it stack up? And I think that whole everything that I just explained is just deep local knowledge. And people ask me often where else I would develop. Would I develop outside of the Austin market? I think the answer is yes. I don't necessarily want to be super concentrated in Austin. Probably already am too concentrated in Austin. But before I go somewhere else, I need to develop that deep local knowledge. I don't want to just go, find an engineer or find a land use attorney and just take their word for it and trust that they're going to get everything done, right? I do trust them to get it done, but I also make sure that I know enough to be dangerous.
And when you're speaking with these people to partner up with, the civil engineers, the architects, everybody involved in that team that makes everything possible to get these developments across the finish line, what are some things to stay away from or some red flags when you're interviewing new partners in looking for this team?
I look for people that are very thorough and that understand and who understand that this is a very complicated process with a lot of different players with a lot of different roles. So it's a complicated project to manage with a whole lot of people involved. So, like a quick example, because people ask me about building a house all the time, right? Like if they want to build their own house, or maybe they want to get into development and they want to build a spec home. They don't, again, similar to what I was saying earlier, they don't necessarily know where to start. And that's the hardest part. Intuitively, they may think, well, I need to go find a builder. And then so some people will, end up with a builder that says, oh, yeah, sure. I can build this for $200 per square foot. So then they've just imagined their dream home in their head with a budget of $200 a square foot. But how does that builder know it's going to cost $200 a square foot? Did he look at plans yet? And so, when people talk to me about experiences with builders like that, I'll say, you need to run away from that person. Right? The correct answer in that situation is it can cost a wide range of things depending on a lot of variables. And to give you a real answer, I need to see a good set of plans.
No, go ahead, finish your thought.
And so to understand how to sequence things, and you kind of get that pretty quickly from your consultants. You'll see, for example, somebody's scope of work, and you understand that, okay, they know what they're doing here, and they know what's going on around them, and they seem to have the experience to truly get this done.
And for somebody who's looking to get into development or even start to just get a better understanding of this type of process for even value add type business plans or any other ancillary business plans, what are some of the important hard and soft skills that somebody would need to dive into in order to be successful?
I think, and again, this is kind of like one of the things I learned through bootstrapping and learning the hard way, but really understanding risk mitigation is a big one. Really trying to envision, not what it looks like if everything goes according to plan, but what could go wrong and how do you mitigate that?
Yeah, I think that's an important way of thinking about it, because you think about the end goal in mind and everything that you want to have happen and wishful thinking. But when you really start planning from a risk management standpoint, a what if the sky falls type of standpoint, then you really become a risk mitigated operator, someone who is able to consistently and confidently handle challenges without being surprised. Because when you only have one line of thinking, that can really throw you off, because we all know how quickly a plan gets thrown out the window as soon as you get started. You can have everything lined up and all the team and everything, but as soon as you start pressing send on emails, everything starts to fall apart. And so being able to handle those and have a plan and action and experience behind that, if you don't have the experience to kind of handle those proactively in your mind and through your past experiences, what are some resources for people to gain some of these skills and gain some of this insight?
I mean, it's all in the relationships, right? And there's no there's no playbook for, here's where you start, here's who you talk to first, and here's who you talk to next. You need to just kind of like figure that out. Um, to the extent that you can figure that out, it's by finding the right people who you really trust to walk you through things. Like, so I keep using that example about, like, for example, we have a really great land use team. We have learned that um, it is really helpful to have them quarterbacking an entitlement and permitting process. You could decide that you'd rather have the engineer do it. You can decide that, well, maybe this engineer is, really has good people skills. Believe it or not, some of them do. And that maybe they are a good fit to go and interface with the city. And you just kind of have to get a feel for, and I'm talking about, obviously a small piece of the deal right now as far as just permitting, but you could say the same thing about construction. You just need to find the right roles. What seats on the bus do you need to fill? Another quick example is that we maintain a really small team, so my partner Drew that I mentioned earlier, he runs the entitlement and permitting and construction processes of what we do. And he does that without a whole lot of help internally. We want to try to keep a lean team, keep our payroll down. And so we'll hire a third party construction manager on each of our projects. So there's an extra, multiple extra sets of eyes, all with a whole lot of skills and project management, so that we kind of just leverage Drew's time and allow him to effectively work on multiple projects and have them operate really well and make sure that things are going according to plan with the contractor.
And you touched on it a little bit earlier with mentors. How many mentors have you had in your experience? How did those relationships get started? And what advice would you have for someone who's looking for a mentor in this space? Because really that is the biggest way to cut the learning curve in this industry, really anything that you're doing. But give us some examples of some of the mentors that you had and how you found them.
Yeah, I mean, I've had mentors that were my employer. I've had mentors that I've met through alumni association, industry events. And so, I think the way you find mentors is networking, whether that's you're networking for a job, whether that's you're networking at industry events. And, you know, you kind of assume that, when you're looking for a mentor, you're looking for an older person and maybe you're a younger person. But regardless of what your ages are, it's just you have less experience than this person has. They have wisdom to offer you. People like that tend to, be in a place where they really want to share their wisdom and their experiences. And so it tends to create a symbiotic relationship. You need the help, and they're at a place in their life where what really fulfills them is to being able to help. And so you get out there, you network, you meet people, you talk about what you want to do and what you like doing. And, you find someone who is aligned with that, and you just form a relationship like any other relationship.
But that's great networking advice. And for you, when you are going through your daily routine, and what does your daily schedule look like? I know that can change pretty frequently, but in terms of what moves the needle forward, what are some of the 80-20 tasks that get you moving forward, and what your daily schedule mostly looks like?
Yeah, I think of my schedule more on like a sort of weekly than daily. I try to front load my week with a lot of the bigger meetings, because things come up during the week and you need to start pivoting or you need to start shuffling things around. And so as the week goes on for me, like Fridays, for example, I tend not to take in-person meetings. I know we had to reschedule this podcast because I was sick last Friday, but I've scheduled these on Fridays because this is a great Friday thing for me to do. Fridays is I'll have some phone calls, I'll catch up on emails, I'll catch up on computer work that I've had to do. Kind of Thursdays are like that too, where Mondays, Tuesdays, and into Wednesday, I'm running around from one thing to another thing to another thing. And I think that helps me keep sane personally. And it just helps me kind of like slow down as I go through the week and go into the weekend sort of caught up on things, as opposed to you end the week on a whirlwind, 5, 6 meeting day, and you go into the weekend with a stack full of emails that you should be responding to, but you don't want to because it's the weekend.
Yeah, and I couldn't agree more with that approach to the workload. And I've started doing that more consistently with setting time aside to get through some of the admin, get through some of the thought work that goes into keeping the business moving forward, innovation, and then just simple relaxation. You can't stop. If you stop, you fail type of stuff. And that was both very powerful, but also can be a disadvantage to folks when they're working, especially on something so much. So taking that time to just take a beat, take a breath, relax, and reset your mind so that you can go and attack the work in an even more powerful way.
Well, when you've got a full-time job, it's kind of easy to tell someone how many hours a week you work, right? Like, I go in the office, or I log in from 9 to 5 or 7 to 7, or whatever it may be. And when you are self-employed, you're kind of, in some ways, you're always working, right? Because you're kind of thinking about it all hours, or you'll respond to an email or a call or a text, outside of traditional office hours. So when are you working? When are you not working? And so one of the habits that I've developed is I started going years ago. I did this, but I started going to the gym after work instead of in the morning. And that's my way of saying, all right, I'll go to a gym with sessions, right? And so I need to go right now to 5:15 because that's when a session starts. If I'm late, I'm late for class. And so I have to wrap up my day by then, so that, you get in the end of it, 6:30. Now it's dinner time. I've got a young family, so I got to go home and have that family time. And what that provides for me is a nice hard stop, and an hour where I'm distracted by working out. And so it helps me unwind from the work day and not just kind of let my workday bleed into my evening and my family time, and it kind of never really stops.
Yeah, striking that balance is key. Even when you have such lofty goals and you are a hard worker, it's important to find that balance for everything, for your simple happiness, for your business. Taking that time off can feel like you're abandoning your business, you're not working as hard, but once you reframe that mindset a little bit,
Mhm.
it's a game changer. So, and speaking of goals, and we're coming up on the hour here, so just a few more questions for you. What are some of the goals that you have right now? What are you currently focused on?
Well, we've got, I mentioned that there's some of the projects that I've got in the pipeline have taken a little bit longer to get off the ground than I wanted to. So, we closed a transaction about a month ago, or I guess month and a half ago, closed another one yesterday. And I've got another one that I'm working on closing through late spring, probably into summer. And at that point, you know, I joke, but it's like, okay, well, I've got everything closed and capitalized, and I'm gonna go, call me in 3 years, Drew, when the buildings are done being built. That's obviously, I'm joking, but it does allow me to sit back and say, okay, now what do I want to work on? What do I want to improve operationally within my company? I talked about, I would love to get to the point where I can actually just send out a memo and raise a bunch of capital. And right now, I don't really have the time to get better at that. And my hope is that in the next couple months, that's going to change. I will. And now I can make a goal of, well, I'm going to actively get better at capital raising for the next round of projects, or I'm going to get better at having a more disciplined approach to market analysis, for example, whatever it may be. Quick example, like I would like to be at a place where I am on a, say, quarterly basis, literally touring the buildings that are in my competitive set and understanding what they're renting for, and understanding what it's like to be in that building, rather than just looking at your desktop and saying, well, I guess these two buildings are about the same, right? Treat it like a tenant looking for an apartment for themselves to live in. And I haven't had time to do that consistently. And that's something that is a goal of mine to start doing.
Fantastic. And last question that for you to wrap up the interview, if you could go back in time and give yourself advice, when would you go to, and what advice would you give yourself?
I would go back to, I'd go back to when I kind of started moving from the houses and the townhomes into multifamily, and just tell myself to slow down a little bit more, like moving at a fast pace. I like, testing myself and growing quickly, but it also is stress inducing, and you only live once, and there are more important things besides work. And and what I ended up doing is I ended up into a place where way too much of my time and like my mind space was dedicated to work. And so I've been working on trying to rebalance that a little bit. It's another goal of mine, right? Beyond these couple near-term closings, is to spend a little bit less time thinking about work and actually working, and a little bit more time on hobbies and interests and family and whatnot. And, if I had just chilled out a little bit more on the front end, I would not have had to grind quite as much as I have over the past, 5 years. I might have grown a little bit more slowly, but there's a balance. Excuse me. There's a balance to be had, and I think I was on the aggressive side of that balance.
Yeah, but we live and we learn, and hindsight's 2020. But I'm very excited about everything that you're working on, and I know I'm very lucky to have met you and worked with you, and you've been a huge influence on myself as an entrepreneur, as a young professional, and as someone who was starting out learning, and you gave me my first real opportunity, and I can't ever thank you enough for that. And Chris, thank you so much for coming on today and giving us your time. I really appreciate it.
Absolutely. It's been great talking to you, and thanks for having me on the show.
Yeah, well, guys, this was Chris Affinito of Notional Development Partners. I'm your host, Cory Mortensen, and we'll see you next time. Well, that's a wrap for today's episode of the Mastering Commercial Real Estate Podcast. Thank you so much for listening. If you enjoyed the episode, go ahead and give it a like, leave a review, or share it with a friend. It really helps us grow and reach more people who want to master this space. If you have any feedback or ideas to improve the show, reach out, leave a comment. I'm always looking to make it better, and tell us what you like or didn't like. And don't forget, if you're ready to start investing passively and want to learn more about upcoming commercial real estate deals, head over to ONE-9 Holdings, that's 19 Holdings, and join the investor list. Thanks again for listening, and I'll catch you on the next episode.